let's get started on our webinar, which is Employee Retention Tax Credit, Secret Jewel of COVID Disaster Benefits. Well, I want to thank you, first of all, to everyone who took the time from your busy day in the middle of the tax season, even though you're not preparing taxes, to join us on this webinar. And, just so you know, we are extremely busy like many other accounting firms in the middle of the tax season, but we do care about you and we don't want you to lose out on these benefits. So hence, that's the reason we called for a webinar 1 week before the tax due date. If we are doing this webinar, it doesn't mean that we are not busy. So who is excited for Employee Retention Tax Credit webinar? Put it in the chat comment if you can hear me loud and clear. So without further delay, let's get rolling, because I want to make sure if you have time, we address some Q&A at the end of the webinar. So a little bit of a disclaimer, this material in the presentation have been prepared by and is the property of KB Tax Deviser CPAs. Neither the presenter, which is myself, and nor this presentation creates an accountant-client relationship, okay? All content, including images and impressions, are protected under the US intellectual property and trademark laws, and any reproduction or dissemination of any element of this presentation without prior consent from us is expressly prohibited. Before taking any action based on this information, we strongly encourage you to consult with your professional accounting advisor about your specific situation. This is not a tax advice. So a little bit about myself. My name is Minal Babria. I'm a CPA, certified tax coach, certified tax planner, and certified concierge accountant, CEO, and one of the co-founder of KB Tax Deviser CPAs. Along with me, you see on the other side, my sister, Taruna Kanani, who is another co-founder of our business. I have more than 18 years of tax industry experience. And as you all know, there are millions of accountants in USA, out of which only about 700 accountants have the experience of tax planning like me. And I'm proud to say, out of those 700 accountants, 2 of the certified tax coaches are with the KB tax team, which is myself and Taruna. And as a certified tax coach, we are extensively trained in identifying loopholes, deductions, and credits that saves my clients thousands of dollars in taxes. I'm one of the lead tax strategies focused on tax advisory and business advisory services, winner of the Gold Stevie Award for Women in Business in Accounting and Finance category for 2021, and winner of 40 Under 40 by CPA Practice Advisor Award 2021 as well. And I'm serving on Intuit Tax Council member for 2021 to 2024 duration, and a proud member of Force Finance Council member as well. So a little bit of a nutshell, what our company have done in last 2 years, or 2 years and 2 months of roller coaster, if I say it. Our company together have helped raise $93 million in EIDL loans, more than $2 million in PPP, of which $2.1 million has already been forgiven, and more than $652,000 in terms of grants, and $781,000 in employee retention tax credit. Can we get some golf claps or some recommendation in the chat box for our team, the crazy work my whole team is doing here? These are not crazy numbers. You all have accountant in some shape, way, and form, but how many of your accountant have helped you with any of these things? Pretty much majority of them are not, and if they are helping it, it's been a nightmare. So this is the crazy, amazing work that my team have done it, and I'm really proud of my team. What you think you can save in taxes, looking at the tip of the mountain, but when you look at all the COVID bills and all the tax regulations, how much you can really save in taxes. This is the thing, if you all know, the Tax Cuts and Job Act is 37,000 pages long, of which only 30 pages tells you have to put the right number in the right boxes and call it a day and file your taxes, which is what most accountants in this country are studying. Nothing wrong with that. You get what you pay for. Whereas me and my team study rest of the 36,970 pages to identify tax savings opportunity for our client. IRS wants to give this benefits to the business owner. And that's why they have spent 36,970 pages. When it comes to the tax benefit, IRS is our friend. If it was not, why would they spend so much of time and energy printing such a huge documentation and passing all these bills? Now, as you know, just to understand a little bit about IRS, years ago, IRS wanted to promote, solar businesses like installing solar panels. So they gave out a whole bunch of solar credit. When IRS want to increase the purchase of the houses, they will give out lots of credits for first-time home buyers. If they want to increase car sales, they will give out a lot of accelerated depreciation on cars. Now, this time, IRS wants to increase employee retention rate and want to reduce the unemployment rate. And because of that, employee retention tax credit have been introduced. So, and a little bit of housekeeping on IRS operations during COVID, where IRS stands on ERTC, because this is nothing new. Many of you may know already ERTC, but may not really know in what context and what it is. And many of you may not even know of this at all before. So Forms 941 that IRS have unprocessed on its end as of February 2nd, 2022 is 1.5 million. Can you imagine? 1.5 million forms are still unprocessed, which was at 2.3 million forms as of September 8, 2021. For our clients where we applied for the ERTC earlier in the year, majority of them have already received it. Now, as far as the 941X, IRS still have 444,000 forms which are not yet processed, which is higher than what it was in September by almost 100,000 forms. Common but costly errors that employers should avoid when filing taxes or claiming these credits is, without having the full knowledge, please do not submit the 941 forms. 941s are so easy to mess up. That's why most accountants are raising their hand and not falling into this trap. They don't want to do this tedious work because they know what are the complications that could go wrong. I'm just blessed that we have a separate COVID department, which is led by one of my sister, Jigna and JV Romello, and they're doing an amazing work. Without them, I don't think we would have been able to keep up with this COVID services even now. So IRS has announced on November 19, 2021, its intention to roll out intensive IRS examination of ERC in 2022. And what it looks like, they will have a team of trained personnel who will go back and look into all those 941X forms that were filed, look into the mistakes, maybe request some chargeback and stuff like that. So this is not something you want to do it if you don't know how to handle it. So a little bit of a legislative history. As you all know, last year, tax bills were being passed just like anything. We have never seen in the history of USA this many tax bills being passed without being finalized in such a short period of time. So because of that, once they pass the bill and, more people look at it and review it, they kind of get another access. Hey, we made this mistake, or we should have done this better. And they go back and change it. So originally, ERTC was announced and created by in the CARES Act of 2301. And then it got enhanced and modified and extended for Congress application, Consolidated Application Act of 2021. And then American Rescue Plan Act of 2021 came in, and it got, revised once again. And then final, was the Infrastructure Act. We still have the debate going on that should we allow business owners in Q4 of 2021 to qualify for the employee retention tax credit or not? And should the owners of the business themselves qualify for the credit or not? So depending on how that progresses between House and Senate, we will kind of come up with another update on that side. Employee retention tax credit, the goal is to keep your employees on the payroll and to reduce the unemployment tax rate. And the basics of this credit is employers who spend on wages and health insurance may be entitled to get some credit, and which is a credit against their payroll taxes, which means you get a refund from the IRS for the payroll taxes that you have paid. To qualify for this credits, they have to be dropped in the gross receipts. It could be any quarter of 2020 through quarter 3 of 2021, or it could be because your business was impacted by full or partial suspension by order of government, again, the same time frame, or it's a new business, which is considered as a recovery startup business. If it is a recovery startup business, you're lucky. You do not qualify for PPP, EIDL, grant, none of those, except ERTC credit. So this is a really good thing. It's a new business. You have lots of expenses and a lot of things going on. To qualify, you have to be less than $1 million in revenue, and you get about up to $50,000 per quarter, which is quarter 3 and quarter 4 of 2021. I'll go in more detail in next few slides on that one. Any borrower of a PPP loan may be entitled to employee retention tax credit retroactively and prospectively, which means you got the PPP loan and you never applied for this credit. This is your chance to get the credit before you file your taxes. And there are 3 different types of ERTC credit. One was Section 206, which was only applied for 2020 tax year. Section 207 for 2021, and Section 302, which goes back to 2021, 2020 and 2021, as well as the new businesses. Now, keep in mind, if you're applying for 2020 employee retention tax credit, and you have already filed your 2020 tax return, you may have to go back and amend your 2020 taxes. That's why, we just wanted to roll out this webinar now. So you don't have to amend 2021 right now. Put your 2021 taxes on extension and apply for 2021 ERTC credit, and then, file and prepare your taxes for 2021. So you get the credit, and, we are saving that hustle of amending your tax return again. So prior to Infrastructure Act, now, between these different bills that were passed, you see here, one bill will come in and say, hey, we are giving you credit for this many months. The other bill will come, no, we are only giving you up to second quarter, third quarter, or we are not going to go retroactive. So there have been roller coaster of changes. I'm only going to go towards what is final and what is new right now. If you think that you have applied for the credit, and you have got a lesser, or you had got a contradictory information, then it's time to kind of reassess whether you're eligible for more money or not. So coexisting with a PPP loan, initially ERTC round 1, they said no. That's why I have put in no here. And then they came back and said, you know what? The pandemic has got real bad impact on the business owner than we initially thought. You are retroactively eligible. So you can still apply for the ERTC credit, But keep in mind, the wages that you're using for PPP loan and the ERTC credit cannot be the same. So say, for example, you utilized March month of wages for the PPP loan, then you get the ERTC, but not for the month of March, but April, May, June, and July. So all the rest of the month. ERTC round 2, which is applicable from January 1st, 2021 to June 30th, 2021. It's again, you are eligible, but not on the same wages, and same thing with round 3 as well. Now, eligible wages could be $10,000 per year per employee. This is important. For 2020, it says $10,000 per year per employee, whereas for 2021, it's saying $10,000 per quarter per employee. It's not per year limit. The $10,000 wage limit is per quarter, which means we get more money in 2021 ERTC credits than 2020 tax year. And rate of credit is 50% for 2020, and then 2021 is 70%. Now, what it means, if you have $10,000 per employee eligible wages for this credit, 10,000 times 50%, $5,000 per employee is what you get for credit in 2020. But in 2021, 10,000 times 70%, which is $7,000 per quarter. Again, $7,000 per quarter is what you get in terms of credit. And the maximum amount of credit that you are eligible is for 2020, $5,000 per employee, $7,000 per employee in 2021. Now, this is prior to Infrastructure Act. We were told that you will be eligible for all 4 quarters of 2021 for the ERTC credit. And then they came back and said, you know what, wait, we will only give you credit for first 3 quarters of 2021 and not the last quarter. Now, there is still debate going on because, there have been lots of friction and how the economy is progressing. The chances are they may come back and say, hey, we are going to give you credit for all 4 quarters. But again, that's still in debate. And as soon as we find out, for those of you who are registered today, we will send you an email update on that one. So maximum credit that you can get per year is $5,000 per employee in 2020. And in 2021, if all 4 quarters are approved, it will be $28,000 per employee for the whole year, or in the worst case scenario, $21,000, which is like first 3 quarters, $7,000 per quarter for each employee. And that's not the small amount, it's a huge amount. So I'm going to cover in our webinar today some of the examples, and these examples may help you answer many of your questions. And still, if you have any questions that is not covered in the example and the presentation, please post it in Q&A. I'm more than happy to go over with that. So ABC company has 10 employees. Each employee earns $40,000. 2020 gross receipts dropped by 55% for each quarter compared to 2019, and 2021 gross receipts dropped by 30% for each quarter compared to 2019. These are the key important numbers to keep in mind, okay? How much is the gross receipts dropped between the 2 years? So 2020, assuming no competing PPP loan, which means they got the PPP loan, but that loan was utilized for the different quarter, and we are using the ERTC credit for the different quarter, for each employee, wages of $10,000 per year times 50% credit, which means $5,000. And this company have 10 employees, which means the total credit that they are getting is $50,000. This is not a small number. $50,000 in credit, that's a huge number. Probably you can potentially hire 1 more employee, or in the worst case scenario, I would say reserve 50% of this money for future growth. and use this 50% of this benefit money to give good benefits to your employees, create that competitive environment, retain your employees. We all know how much it is tough to find qualified employees who really want to work with you. And if you had this extra money, you can grow your business and also pay some better benefits to your employees and have that win-win environment for all of you. Wouldn't that be right? And for 2021, assuming again, no competing PPP loan, ERTC credit that will be received by this particular employer is $140,000. This is 3 times more than what they would get for 2020. So pre-rescue act, for each employee wages of $10,000 per quarter times 2 quarters and 70% credit. If you got the smartphone, do the calculation in your calculator, 10 employees, 14,000, multiply, it's $140,000 right there. Now, because they said, we don't want to give you out credit for the 4 quarters, but you still get the credit for 3 quarters. It's a simple math, $7,000 times 3 quarters, $21,000 in credit per employee. Again, $21,000 in credit per employee. So if you have 10 employees, that's $210,000. Now, if some of you, you have seasonal employees, or you had an employee who worked for you for a while and now that employee is gone, that particular employee will count in your head count of employees still. So, last year, throughout the whole year, say, for example, overall, you had 14 employees, but of which at the moment you only have 10 employees, you have to calculate based on 14 employees times 7 times whatever number of quarter you're eligible for. So it is highly likely possible 1 quarter you get higher dollar amount, the other quarter you get lower dollar amount. But this is the money, you get it, not your employees. You get this money and you are in control however you want to use this money. If you do not request this credit, you are the one who is losing this money. So it's pretty much like free money, better than the PPP loan, better than the EIDL loan, because there is no restriction on how this money can be used. You can use this money whichever way you want it. There is no restriction on it. So it's kind of a no-brainer to not get this money. Now, let's go over this one. Even if PPP loan was received, and if plenty of wages are there to go around, you may still get the full ERTC at the same time, full amount of PPP forgiveness. How would that be, right? Get 100% PPP loan forgiveness and also get 100% of the ERTC. Wouldn't that be crazy? Who is excited for this money? Who is excited? Let me see some excitement in the chat box. So one of the case study that I want to go over, is, Ross is saying, bring on the money. Why not, right? ERTC calculations for multiple sources. We had one of our clients, his own accountant calculated ERTC credit, and $10,000 was the calculation done by his accountant for 2020. The payroll service provider said, you know what, we can also do the ERTC credit calculation for you. And they said, $14,000 for 2020 and said you're not eligible for 2021. Turns out this client reached out to us earlier this year, and my team calculated ERTC credit, looked the difference in number. $17,000 for 2020 and $24,611 for 2021. If they had not got this second opinion from us, they would have pretty much lost $30,000 plus. Can you imagine? We all pay a lot of money in taxes every year, not because government is charging more money. We pay more because of our inability to learn, because of inability of your accountant to be proactive with the tax laws. Government wants to give you this benefit. But if you don't want to take this benefit, that's on you, not on the government. The result, KB tax understands the interaction between the PPP, forgiveness, and ERTC eligibility at so much deeper level. And therefore, we were able to maximize the ERTC eligibility. And as a result, the ERTC amount increases dramatically. And after waiting for 3 to 4 months, the client's ERTC was rejected. That's another big thing. And they came to us. ERTC was rejected due to incorrectly filling out form on 941X. And IRS has strict rules about filling out the 941X. Even many payroll companies who are filing your 941 forms on a quarterly basis, believe me or not, they screw up on 941X as well, because they don't understand, what to put in and what IRS process looks like. They just have a team of payroll processors who are not an accountant, who does not know how to interpret tax laws. So they are not your best friends in that sense. And after we recalculated ERTC, we found that it was higher than what their previous accountant calculated. The ERTC increased by almost $28,000. We submitted the 941X in the correct format, and ERTC money was received 5 months later. So we have many different case studies, and our team have helped raise almost $781,000 plus in just ERTC credit.
Oh, now, they're still counting on that side.
Absolutely. So these are some of the snapshots, that our clients received ERTC credit. Look at these numbers. This is a lot of money. And if it was not for us helping them, this money would have been donated to the IRS. And then we just play that same old cassette. IRS always wants to charge you. No, IRS does not want to charge you. IRS is your friend, provided you understand the rules. And I'm not saying by any means at all that your current accountant is negligent or incompetent. It's just that not everyone is doing tax planning, and they don't have, the intellectual have to look for this kind of opportunities when they're bogged down in preparing 500 to 1,000 tax returns in a small 3 or 4 month window. They cannot go into up to this detail. In our case, we are blessed that we don't take walk-in tax preparation, as you all know, that we can allocate and dedicate some time to research all of these implications to give you the maximum value. So have to find out gross receipts to qualify for ERTC. By the end of this webinar, you will have a little bit of more information if your business qualifies or not. And if you need more information, I will guide you as to next steps as well. The gross receipts for the purposes of ERTC is any amount received for services or sale of products, any income from the investments, incidental or outside sources, including your interest, dividends, rents, royalties, annuities, regardless of whether such amount derived in ordinary course of taxpayer's trade or business or not, doesn't matter. Have to use the same cash or accrual method of accounting as you use for your tax return purposes. And it does not include any loan repayments or sales tax. For the aggregated group, significant decline in gross receipts test is determined based on the entire group. So what it means, if you have more than one business, okay, you have 2 or 3 or 4 or 5 businesses, the gross receipts test have to be looked at combined, all the businesses that you own. And it is highly likely possible one business as a standalone doesn't qualify, but as a group, it may qualify, or the business which qualifies as a standalone as a group, it doesn't qualify. So we have to look at both ways. The gross receipts does not include your PPP loan. In fact, PPP loan is not your revenue. So if you're accounted or you have booked as a gross revenue or taxable income, you need to correct that. shuttered venue operators grant or restaurant revitalization grant are not included as part of your gross receipts. So let's look at this example. Company A with $400,000 of gross receipts in 2020 and $1 million of gross receipts in 2019 quarter two. So it's the same quarter we have to compare year over year. The percentage drop per company is 60%. So it meets the 50% test as a standalone on company A and qualifies. So the combined drop is 42.5% and meets 50% combined test. No, because this is 42.5% only, so it does not qualify. So where I'm getting this 42.5% is the average of these two numbers. Now company B has a $750,000 in gross receipts in 2020 and $1 million in 2019. Because company B is doing really good and have less drop in business, this company does not qualify. As a result, as a part of the aggregate rule, none of these two companies will qualify. Now, we have seen cases where one company qualifies, the other company doesn't. And it turns out there is such a small difference that both companies end up qualifying. Like say, for example, if this drop was 80%, even though this was at 25%, and when I take the average, that's going to be higher than 42.5%. Both the companies will end up qualifying for the ERTC, even though this company have less impact. So you have to look at aggregate rule and as a separate rule. Since company A and B got combined under attribution rules, both flunk the drop in gross receipts test together, and without aggregation, company A alone would have qualified for ERTC. Now, if your accountant or whoever helped you with the ERTC credit help you get money on one company, please hold your breath tight. You may be required to pay that money back because it was a mistake. So you just have to remember that. Eligibility for ERTC drop in 2020 gross receipts. So if it is the employer who was not in existence at any time during 2019, then you do not qualify for ERTC based on that drop in gross receipts. You have a different test to meet. And the example here is ABC company did not exist at all in 2019. ABC cannot qualify for ERC for any quarter of 2020 based on drop in gross receipts. However, eligibility for ERTC alternatively available if based on full or partial suspension. What it means, if due to government order, your business was required to be suspended or closed partially or fully, then you are still eligible for ERTC, even though you do not have drop in revenue. You could be still potentially be eligible. Now, if you started business in 2019, say for example, in quarter one, then we will compare the revenue or gross receipts quarter one of 2019 with quarter one of 2020. Doesn't matter when your business went live, you still consider the whole quarter. And if business started, say, for example, February 10th, 2019, compare each quarter and see if your business qualifies. If you started business in the middle of a quarter, extrapolate part month to full month, and then compare both the quarters. The eligibility for ERTC drop in 2020 gross receipts, like say, for example, any gross revenue after business acquired included in buyer's gross revenue, of course, then you have another option, which is a safe harbor. For purposes of ERTC, acquirer, which is a purchaser or buyer of a new business in 2020 may include gross receipts prior to acquisition, which means if you're a new buyer of a new business, you can compare the revenue of this year to the last year, which is the revenue that seller had reported, and see if you're eligible for that. Now, a safe harbor rule is not mandatory, it's optional, and many times many accountants don't know this rule, and they just tell you you're not eligible. So you have to look into that option as well. Initial gross receipts drop. Now, this test is for 2021. So if you are, ERTC eligible for 2021, any quarter, if there is a gross revenue drop for such quarter by 20% for the same quarter in 2019, because 2019 it was the most recent year, which was a normal year before the pandemic. We are comparing all the gross receipts in 2020 and 2021 with 2019. So in 2019, when we do that comparison between 2019 and 2021, as long as there is a 20% drop in revenue, you are eligible for ERTC for 2021. For 2020, you need 50% or more drop in revenue to qualify for that credit. So if Q1 2021 dropped by 22% when it compared to 2019, you're eligible. But if the drop in revenue was only 15%, you're not eligible. So the gross receipt test have to be made separately for each quarter. And if you fail for gross receipt test in one quarter, that's the only quarter which is not eligible, but rest of all the quarter will be eligible. So, that's something the key here to keep in mind. Now, availability of credit for employers not in existence for whole year of 2019. For drop in gross receipt for any 2021 calendar quarter, if employer was not in existence at the beginning of same calendar quarter in 2019, substitute 2020 numbers for 2019. So what it means, you didn't have any business in existence in 2019. You opened your door in 2020. Then 2020 revenue for that particular quarter will be compared with 2021. So, and if you still show the drop, you're eligible. If you don't have the drop, you're not eligible. So that can be utilized as well. Now, the other way of safe harbor, oops, I clicked a little bit too quick. Okay, safe harbor, which is backward looking. If you don't meet the drop in gross revenue test, then there is a second chance. Election to use alternate prior quarter's gross revenue, look at previous quarter, compare it to the same quarter in 2019, and use 2020 numbers. So what it means, like say, for example, your business never existed in 2019, your business opened the door in second quarter of 2020, you will use second quarter of 2020 revenue as if it was second quarter of 2019 to meet for the test. In a very rare scenario, I've seen some businesses that they do qualify for ERTC, even looking at that safe harbor rule as well. Now, where to apply for the ERTC? A PPP loan, as you all know, you have applied with the bank. You apply to the bank for the forgiveness as well. EIDL loan, SBA website, EIDL grants are SBA website. If you're applying for the county grant or state grant, you have to look up with your county and state. Those grants are still available. So you have to look, county and state grants as well. 2020 ERTC, you have to file Form 941X. And 2021 ERTC at this point in time, actually it's 941X only. We have lost the time to file 7200 form as of December 31st. And if it is a recovery startup business, which means it's a new business, that began operating after February 15, 2020, or what it means, it started its operation of business in the middle of the pandemic, then average annual gross receipts for last 3 years are less than $1 million, then you are a qualified employer. And you get up to $50,000 per quarter, even though you do not have any drop in gross receipt or your business was not impacted by government suspension. So if it is a new business, you do not have to meet those revenue dropped test. You are still eligible for ERTC credit. But in this particular test, you can only get ERTC credit for quarter 3 and quarter 4 of 2021. And that's only up to $50,000 per quarter. Since you don't have 3 years of history, use the time period in existence as a test to meet for this test. here it says not in Q4 2021. I think that is a mistake in the slide, but you are eligible for Q3 and Q4 of 2021 if you are a recovery startup business. So don't go by that wording on the slide. And exact language from the statute is like, recovery startup business is the term recovery startup business means any employer which began carrying on any trade or business after February 15, 2020. So like say, for example, you have a business that you bought and you were doing some renovation and stuff like that, and your business never started generating revenue, never opened the door to the outside public before February 15, 2020, you are one of the eligible employer until, that falls under February 15, 2020, because the recovery startup business is a business who opened the door after February 15, 2020, not before that. Or you opened a new LLC and started a new business after February 15, 2020. The LLC, some of the examples here, LLC established in New York City in November 2019, business not funded, operations not geared up, and first hamburger not sold until March 2020 is eligible under the recovery startup business. The owner of a business rental residential apartment building in Denver buys new business apartment building in Boulder after February 15, 2020. That business also qualifies for the recovery startup credit. And bookstore in Seattle installs new cafe in center of bookstore after February 15, 2020 during COVID shutdown, also qualifies for this business. So if you are one of the recovery startup business, you are eligible for the ERTC credit as well. Let me launch one of the poll. I'm just curious about how many of our attendees have got ERTC credit and how many are still waiting on it. So if you don't mind taking this poll, would really appreciate it. And while you are taking this poll, I'm going to go over a couple other examples. Okay, so this is only applicable for 2021, and I wanted to cover as many more examples as possible in this webinar. So you all get a little bit of a good idea whether, if you applied it yourself or your accountant helped you apply it under the old rules, and if you're eligible for more benefits. I just want to make sure that you get everything that you need being a small business owner. So I'll give a couple more minutes for people to take on the poll. We have only 38% of the participants have taken the poll so far. So like say, for example, here, now that we have determined the eligible quarter, note that it does not necessarily mean the wages for the credit are eligible. You have to have eligible quarter at the same time, whether you had taken the PPP loan, whether you have got the forgiveness, and whether you have enough amount of wages for that particular quarter or not. All of this plays a key role here. So say, for example, Sarah Jones, who paid wages of $4,000, eligible quarter and eligible wages are there for Q2 and test 2, but credit, she has not taken any credit. So then eligible wages will be $4,000, and 4,000 times 70% of that, she can only get $2,800 as a credit. Whereas Jimmy Thompson, with $16,000 in wages paid and is eligible for Q2 and have the eligible wages, have not taken any credit before, will get $10,000 as the eligible wages and $7,000 in credit. So you see how it plays role. If your wages that you have paid to an employee for the whole quarter is less than $10,000, you get 70% of that particular wages paid. And if those wages are more than $10,000, you get 70% of the $10,000. Now, if Angela Gomez here, $9,000 in wages paid, and if she's eligible, but she has got the credit of $5,000 already in 2020 with 10K in wages, Now she will be eligible for 9,000 times 70%, which is $6,300. So between 2020 and 2021, she gets $11,300 in credit. Now, also keep in mind, if you're eligible for 1 quarter, like say, for example, 1 quarter of 2020, you are eligible for ERTC credit. The next quarter, you don't have drop in revenue, but you are not yet up to 100% in terms of revenue by that quarter. Both the quarters are eligible for the credit. So, the second quarter, the following quarter automatically becomes qualified to receive that credit. Alrighty, let's end this poll. I feel so happy. We don't have a single person saying, I don't think I'm eligible. 0%. Let me share these results with you all. We have this one, 0%, I don't think I'm eligible, which means pretty much every one of you are either eligible, whether you have applied yourself or not applied yourself, either one of them. So that's kind of really interesting. I'm glad that we are doing this webinar in a timely session for you. Okay, I think I can skip some of the slides, but overall, with the ERTC credit, there are a lot of things to keep in mind. Your gross receipts, eligible employers, eligible employees. If you're an owner of the company, you may not be eligible. As the law stands right now, you're not eligible for the credit. If you have your spouse in the business, you may not be eligible. So we have to look at all of those. If you have more than one business, we have to look at the aggregation rules. If you're disqualified because you don't have a drop in revenue, we have to look at whether you were impacted by shutdown order, or is it a recovery startup business, and you qualify under that rule. So we kind of have to look at multiple options as to what basis you qualify and what basis you don't qualify. And you are eligible for ERTC, even though you applied for the PPP loan or you got a grant or any of those, you are still eligible. It's just that you cannot use the same wages from the same time period for both the purposes. And how to maximize PPP and ERTC, we look into your quarter time frame of the PPP loan. Whichever employee qualifies for the PPP loan, like say, for example, employers of the business who are the owners, they use their wages for the PPP loan. They are not qualified for the ERTC. We kind of save other employees' wages to be utilized towards the ERTC. So that's kind of one of the examples, but we use a whole bunch of different small strategies, to make sure you're getting maximum ERTC credit for your employees. This is a small flow chart that we have created for all the attendees of the webinar. You will receive this flow chart once the webinar is over, but just to make it a little bit easier for you to understand, we have just kind of created a flow chart which goes over all of this in a easier to understand. It's a summary. And just overall to look here, if you have got the PPP first row, second row, and then you are getting ERTC, what to look for and what amount you're getting and what is better. So PPP first row and second row is without any doubt is better than the ERTC, but ERTC 2020 and ERTC 2021, PPP is better here. Take both, absolutely. It's no brainer. It's extra money in your pocket, and whether or not you decide to take this money or not, we will be paying extra taxes in future years. So why not just take it, maybe reserve it in a separate bank account or invest it in somewhere that when you have to pay extra taxes in future, you can, pay out of that investment growth itself. So coordination required in the same time period, absolutely yes. You have to map out strategy so that you get 100% forgiveness on the PPP side, as well as you get maximum wages eligible for the ERTC. So I think we are all done on that side. Now, for those of you who are attending this webinar, this offer is absolutely just for you. We can perform the feasibility study to identify if your business is eligible for ERTC for a nominal fee of $690. Just for that fee, we can identify if you are eligible for the ERTC credit or not. When we do that analysis, we give you a rough ballpark of what is the amount that you're looking for in terms of the credit. Now, because you have been the attendee of this webinar, I'm just extending this offer to you out of courtesy in the middle of the tax season. Because we are taking you in the middle of tax season for this analysis, if you think you can provide all the information in a timely fashion, then only reach out to JV Romulo, one of my team member. If you think it's a nightmare for you to get all the information, please do not waste your time and our resources. We do need a lot of information like your PPP forgiveness application. We do need all your payroll reports by each quarter for each employee. So I just want to keep that, aware. We are not here sitting to take in anyone and everyone. We just want to make sure we keep this offer limited to first 15 attendees or first 15 people who reach out to us for ERTC feasibility study. Once again, I want to thank everybody for joining us today. I know we covered a lot of information and I hope it was informative. Before I pause for the day, Taruna, do you have any questions?
I have one question here. Let me just open it. It says I already filed for 2020 tax return. Any opportunity of ERTC now?
So you have already filed your 2021 tax return?
2020.
Or 2020? Absolutely, yes. You are still eligible for ERTC credit. You just have to make sure that, we analyze, first of all, whether you're eligible. If yes, how much it is. Get those 941X form out as soon as possible because it takes time to receive that money. And then we go back and amend your 2020 tax return so that you are eligible. Perfect. Now, do we have any other questions?
Yeah, there is one more question here. I started my business in June 2020. Will I be eligible to receive startup credit and ERTC credit both?
So if you have started in June 2020, and if you had any employees, then just for the month of June, that falls in the second quarter, you get ERTC credit. And then if your total revenue is less than $1 million, for the third quarter and the fourth quarter, you get $50,000 of startup recovery credit. So, I mean, that's a lot of money.
Yeah, there was another question. A couple owning S corporation and the same senior as C corporation having kids but never employed. Are their wages eligible for this credit? I think Jigna did reply saying wages paid to wife will become an eligible wages for ERTC. Another question that I see, if you qualify for ERTC, what is your fee?
Yeah, Kenny, we will go over our fees. We charge a fixed dollar amount per quarter and per number of employees, number of headcount that are eligible for each quarter. We don't do percentage. I've seen many companies which does 15, 20, 30, or 40%. We don't do that. We just want you to take maximum credit available to yourself. So even though your amount could be same, but you have a lesser number of employees qualifying, you're looking a little bit of a lesser dollar range versus higher. So that's definitely there. Then I see from Jason, hey, Jason, what if your company hasn't issued a payroll check at all? Then probably it's the time to issue the payroll check now. If it is for 2021, and just by issuing payroll check, if you're eligible for ERTC, why not? And Jason, I know you, and I will have a team check out just after the webinar. Send us an email which company exactly you're talking about, because I know we are managing many of your companies. So just send us an email about which company exactly you're looking into, and we will kind of do that analysis for you. Perfect. I think we have had a productive webinar. And besides the ERTC, if you are looking for any tax planning strategies to see if you are qualified to reduce 10 to 15,000 or $20,000 in taxes, do let me know. We still have time to do tax planning for 2021 tax year, even though the year is over, but you have not filed your taxes. And before you file your taxes, you do have opportunity to take advantage of some last minute tax opportunity, tax advantages. So
I'd like to add something here. Even if your 2020 tax returns are ready, it doesn't hurt getting second opinion to see if you are eligible to receive any further tax saving.
absolutely. So I think I see one question that I have not answered from Neha Goel. I have filed my 2020 return and applied for ERTC return, but not deducted wages in 2020. Can I adjust the same in 2021? Unfortunately not. You have to go back and amend 2020 tax return. You cannot adjust the wages from one year to another year. You have to, apply, you have to amend your 2020 taxes for that one. Alrighty, well, thank you everyone for joining us today, and I hope you found this webinar very helpful. Please let us know and give your feedback, what kind of content you would like to see in future, and we will come up with a new webinar series again. Thank you so much and enjoy the rest of your day. Bye everyone.